The future belongs to those who dare, those who will do extra. And our guest today has done the extraordinary. Hi, I'm Mark Croskery, and welcome to Business Dive Extra, the program that looks beyond the dollars and cents to the movers and shakers in business and the capital markets. He is passionate about building brand Jamaica and is an impactful leader in the business sector. He heads one of Jamaica's leading companies that focuses on manufacturing and distribution and produces and imports top quality brands. He holds a Bachelor of Science in Industrial Engineering Management Information Systems from Northeastern University in Boston, Massachusetts. He started his career in the family business as a warehouse supervisor in 1988. This followed with an exceptional 20-year stint as the company's managing director, MD, then the appointment as chairman of the board in 2014. If you haven't guessed it yet, our guest today is Mr. William Mahfood, chairman of the Wisynco Group of companies, publicly traded on the Jamaica Stock Exchange, the JSE. William, welcome to Business Dive Extra.
Thank you, Mark.
It's good to have you, man.
It's good to be here.
Yeah, no, thank you.
Always good to see you.
Yeah. So, you know, William, Wisynco, it's a beast of a company. The market cap is about 60 billion J's or so now. We get to hear about a lot of the public companies, some of the older ones, how they got started, their history. A lot of their chairpersons or CEOs say they do that so many times. But Wisynco, even I haven't heard it before. I'm sure that a lot of persons haven't really got the history of the company. And, we'd love to just hear how did Wisynco kind of get going?
So, it was basically founded, Western Synthetics in 1965 by my father and his three brothers. It evolved from a direct manufacturing company into, I joined in 88. I think Andrew joined in about 91. He studied accounting in Canada, did his CA at Pricewaterhouse. And when we sat down, we looked strategically at what we wanted to be. And the future, we saw great opportunity in FMCG, fast-moving consumer goods. So we started down the road with brands like Del Monte and then Pillsbury and so forth.
And a lot of us in the marketplace mix it up. Are Andrew and you brothers? Or?
No, we're cousins. Yeah,
cousins. Okay.
And actually, we went to high school together. He was at Boston College during the years I was at Northeastern. So we grew up almost like siblings.
Okay.
And I have to tell you, it's one of the greatest success stories of our business. Usually in the third generation family businesses, it becomes a bit of a testy, sort of challenging issue for cousins to work together. But we grew up and we're so close and we have the utmost respect for each other. He's a workaholic. I used to be a workaholic, and I've tried to improve my golf game these days. But I do still work like crazy, and I'm passionate about the business as he is. And and we just focused on a new path, moved away from the plastics and the rubber boots, and we were in footwear. We even had forays into fishing and conch and manufacturing of seafood, and became focused on beverages and consumer products.
And in those days when it started, so it was started by your grandparents?
My grandfather founded the first company, was Mahfood's Commercial at 132 Harbor Street. That business was really sort of a wholesale, the traditional, what the Lebanese community were involved in, which was they were traders. They would bring in, cloth and material and clothing or whatever. And then his sons, when he passed away, his sons decided they wanted to get into manufacturing.
Right.
And the rest is history.
And how many, in those days, how many family members were kind of at the helm? Was it two brothers?
Right,
or three,
two brothers. Half the family migrated in the 70s. And my father and Andrew's dad, Sam, stayed in Jamaica and decided to continue to build the company. Sam, who was a chairman, worked in the front line building the markets in the Caribbean. We had tremendous export business in CARICOM in the very early days. And then my father was the one who focused more on the manufacturing. I joined in 88 straight out of university in the warehouse. My focus was on distribution and building the capacity for us to get to customers and service customers at a level nobody had ever seen.
And what was that like, William? Was it a bit of, was it your personal decision? Was it a bit of maybe your dad or your mom's decision or a family decision to jump into the business right away after university?
So, well, I mean, to be honest with you, I wanted to go and do an MBA. My father and uncles said, no, you need to come back into the business. We want you to try and come in and help out in certain areas. And one of the most challenged areas was the warehouse. And the company, at that time, we had not consolidated the group. And so we had what Mahfood's Commercial eventually evolved into Wisynco Trading. And that company, along with, by then, in 2000 and in 1995, we formed a beverage company. It was called the Jamaica Drink Company.
And that was like a subsidiary?
It was a subsidiary. We had outside shareholders involved in that business as well. And then we formed, we consolidated in 2005 the entire group into what is now Wisynco Group. Okay. And so you had Western Synthetics Manufacturing, Jamaica Drink, and Wisynco Trading.
And take us back to, in '88, working in the warehouse, you're troubleshooting, as you mentioned.
Yes.
Was it the inventory that you kind of had to go and attack?
I used to drive trucks to go and deliver goods downtown. As a matter of fact, just last week, a very, very long-time dear friend, customer, passed away. And I was telling one of her nieces and daughter the story about one day she needed a delivery of, it was blue soap, and we used to sell a lot of commodities back then.
Yes.
And I jumped in the truck and drove the truck down to West Queen Street to deliver the blue soap to her business place. So it was basically fixing and focusing on building that distribution capacity. The relationship with customers, I mean, when I started, we had 5 sales reps and like 9 merchandisers. Mm-hmm. As an organization today, just our sales and distribution team is around 750 people. So by far, the largest distribution and selling team in the country. And
how many points are you touching today?
We touch about 16,000 customers across Jamaica.
Amazing. So you're not just, unlike maybe some competitors, you're not just focused on the A's or the B's.
No.
You're doing the full spectrum.
Yeah, if you drive into deep rural, parts of Jamaica and you go to the smallest shop, you'll find maybe a water fridge or a Coca-Cola fridge with our products in there. Mm-hmm. And we service those outlets twice a week.
And you mentioned, William, in 1995, you brought in one of the deals, let's say some outside shareholders, where you kind of flung into that at such a young age, and 7 years, let's say, into the family business. Were you in those negotiations? And
yeah, I mean, from the very beginning, I worked closely with Sam, my uncle, and so he was very much a mentor to me. My father, I guess, in those family dynamics, you try to make sure that the family member works, maybe possibly with another branch of the family. But he, in the early days when we were starting Jamaica Drink Company, it was really, a learning experience. We had no knowledge of beverage manufacturing. So we brought in a partner who was a large beverage manufacturer in Chicago. And when we consolidated and then eventually prior to the IPO, he eventually sold out his shares. And so the family ended up, post IPO, having some minority partners in the business, with 3%, I think it was, in the company.
And you mentioned that so many persons don't find their passion. But you mentioned at an early age you were kind of hitting the road, building the customer relations, and it's somewhat public. I mean, it's been said before that you'd hit that road with your car and just tour Jamaica and find distribution points, and you were pivotal in you had your team, but you personally were pivotal in growing the relationships of Wisynco. Is it from that early age in the late 80s, early 90s where you found your passion?
Definitely. So one of the things that I guess we come to realize early, if you're doing business in Jamaica, is a small market, and relationships count. And so, I used to travel all over. Sometimes people ask me if I've ever been to, like Richmond in St. Mary or Mucko in Clarendon, and people use the name Mucko and Clarendon. I don't know where it is, but I actually know where these places are, because we do have customers in all of those areas. So, I've driven every inch of this island basically, and met every class of customer from the very smallest to the largest. we used to have there was a gentleman who was a custos of Hanover years ago who owned a place called Try Me Mini Mart. And I used to go and sit with him, and he'd give me fried pork skin and Heineken, and you know, those types of relationships build tremendous business, you know, sort of opportunities. And I guess it was in the early days when we didn't have 16,000 customers. We maybe had 800 or 100 or 1,000. It was creating those relationships that then we scaled up and built on.
And would you say, William, is that how you really, especially with your new products, or in the early days when you never had all the proven products you have now, is that how you kind of convinced, customers to get them in?
Our strength initially was relationships, but then as we grew, the relationships, I mean, that's still a core function and part of our business. The sales teams, the management who are on the road, and we have, you know, maybe between management and sales supervisors, 120 people. So they have the responsibility to continue those relationships. But now instead of just 800 customers, it's 16,000. And so what we now have to improve on is our service levels, delivering speedier, ensuring we visit more frequently, giving the customers the right mix of products that they need for their business, for the type of business that they have. Those are now more of the focus than the relationships.
And the relationships.
Although the relationships are critical.
Yes.
But the key is ensuring that we have the service side of it now, you know.
Fantastic. Yeah. We're going to come back to that. We take our first break on Business Live Extra. More when we return. Welcome back to Business Live Extra. Wisynco started in 1965 as a manufacturer of Jamaican-made Ironman water boots, which were exported over the course of a few years. In 1985, Wisynco started distributing beverages such as Caribbear, Shandy, Cold, and Chubby from Trinidadian manufacturers. Wisynco is a part of the Coca-Cola family and markets 132 brands from the leading food and beverage manufacturers locally and across the world. The company produces its own trade-marketed products, including water, bigger soft drinks, cran water, sparkling cran water, and Boom energy drink. The company boasts an enviable portfolio of imported brands such as Kellogg's, Häagen-Dazs, Yoplait, Nestle, and locally manufactured products from Tradewinds, Worthy Park Estate, and JP Snacks. We're joined by William Mahfood, chairman of Wisynco Group. Well, this is a first. We can do it again.
Yeah, definitely. I'm not sure if the protocol is you.
No, it's great. So, you know, William, you have all these products, and but you know, I recall Ocean Spray. Was that the big hit, or what really got the ball rolling for Wisynco?
It was a defining moment, I think, in the business. We started Ocean Spray, literally, I came back from Boston, having gone to Northeastern University. I used to drink cranberry juice there, and people in Jamaica didn't really know then what cranberry juice was. So I said, well, I called the people at Ocean Spray. I said, we want to distribute your products in Jamaica. And years later, the fellow who started the business, he said, never in his wildest imagination could we have grown, you know, the brand and the portfolio here the way we did. But it was a tremendous success. We were the ones who developed cran water with Ocean Spray at the time. It was a co-licensed product, so we used the water name with Ocean Spray on it. And then what happened was, I think it was early 2000s, Jamaica, by that time, Jamaica had become the #1 market for cranberry juice in the world. And Ocean Spray signed a partnership deal with Pepsi that took the entire business, and they gave us 6 months notice and said, we're going to move the business to Pepsi in the region. So everybody in the company was panicking. I think it probably was close to, at the time, maybe 15 to 20% of our total revenue. And we had a lot of, you know, management, sales people, sales team. They're going, oh no, this is the end of Wisynco. And I said, and I brought the whole team into our room, and I said, listen, I said, the day will come when people will look back and say, it was not Ocean Spray that was the success of Wisynco, but Wisynco was the success of Ocean Spray. And we focused on a number of other products. Literally in 1 year, we replaced the entire Ocean Spray business with a number of other beverage products, some locally manufactured and some imported. And within 3 years, we're back to growing at 11% compounded annually. Ocean Spray's business in Jamaica collapsed. They fell by 90%. And within 2 years, the brand had no longer the level of volumes that it was experiencing under our distribution. I use that story with our teams now to say.
So where did it, I mean, in those times, because that's, so where did it get distributed? Or
So a couple of things happened. One, we took off the Ocean Spray logo off of our water.
Okay.
So we no longer pay them license fees. That was a big part of their business. And we did it under the water brand. And after that
so
changed.
that's kind of the Crown Water and the evolution
So Crown Water became just a water branded product that we put cranberry juice into.
Okay.
And we continued to grow that brand to huge, I mean, it became a significant part of our business. And the beauty of it, we didn't have to pay Ocean Spray any further licensing fees.
Fees and royalties.
Yeah.
Okay.
So that was it. And then we focused on some of the other partnerships that we had. We started to really focus then on Coca-Cola, and the business for Coca-Cola escalated. 2006 was when we started with Coke. Coca-Cola had less than 3% share of the cola business in Jamaica, and today it's probably around 55% share.
That's
so we've
phenomenal.
surpassed Pepsi in market
William,
position.
A basic question, just how do you keep it fresh and not stale? How do you keep it logistically? How does it work at the end of the day to just get it into all of those, whether it's gas station, households, stores, hotels? So and you look at your warehouse, going to your warehouse before, it's just massive.
Yeah.
And just how do you manage all of that?
The key, and this is one of the things that we focus a lot on in the organization, is on people development. And really the key is ensuring that our teams are engaged. We have very, very strong core values in the organization. We speak all the time about CHIRP, which is the values of compassion, humility, integrity, respect, and passion. And so passion is a core value for us. We say to the people, if you have to go out there, you have to execute to a certain level. We measure how people execute. So at the store level, and we continue to give them the most relevant tools, technology-driven. We have WhatsApp service, for like what they call WhatsApp bot, which is a business platform for us to measure people's performance at the store levels. So we do a lot of that, and then customers, and the engagement with customers is critical. We have to visit them 2 to 3 times a week to ensure that we get the rotation of the products on the shelf.
And is that all in a technology as well? Like when you mentioned WhatsApp bot?
Yeah, primarily driven through the technology and continually upgrading.
Like an ERP system or something?
Our total ERP system, which we are also looking to upgrade now, a major investment. I mean, these are the things that, really you have to focus first on the people, and then you have to give them the tools to be able to deliver that performance.
And would you say, William, back to your earlier point, is it the relationships and the distribution that made Wisynco and Coca-Cola successful? Because everyone said, I mean, like everything new in Jamaica, everybody said Coca-Cola is going to fail. It can't, last. It can't outdo Pepsi. But we hear that about most new things.
We had 3 years in succession, I believe, where the Jamaican market was the fastest growing market in the world for Coke, for brand Coke, and I'm talking specifically for their brand. And Coke is a great global beverage company, but also a great partner. And what we have seen with them is a tremendous acceptance by the Jamaican consumers, because when we started and we used to do a lot of focus groups, I had to go personally to customers who said they'll never buy Coca-Cola again, and build back that confidence to say, we're here, we're not going away.
And is it confidence in that you can give them the product
consistently,
on time
good quality product. They had, historically, Coca-Cola had many bottlers and partners in Jamaica, so there was a there was a hit and miss and inconsistency of supply and service and so forth. We took the business, they had 2 major customers in Jamaica, and today almost every single hotel and restaurant except for a handful, and when I say a handful, I mean maybe 5 in the whole country, are now serving Coca-Cola products.
And going to that point, the one thing you mentioned, focus groups and research.
We do a lot of research.
But Wisynco's marketing, you look at, say, Trade Winds or True Juice, you look at a few other deals you've done. It seems once you do deals also, the marketing, the branding of the products you onboard, it's much better campaigns. I mean, that's what analysts do say also independently. So what about the marketing machinery behind Wisynco? So
that's one of the focuses, of building the brands, the partners that we have. Once we get involved with partners, and like the ones you've mentioned, we will get involved not only in product innovation, but we'll also get involved in terms of marketing and support. We have a strong marketing team. I mean, we've been impacted in a year and a half since COVID started in our ability to do the grassroots type of marketing that we're really good at. So we've had to innovate even in that area. But in the past, we would do...
Has the pandemic, has that been your reference there? Has the pandemic been a
It has impacted us in terms of, you take a brand like Boom.
Like the community marketing.
Correct. We would go into the communities, we'd set up, sound systems, and we'd be giving away products and giving away T-shirts or engaging directly with the young people in those communities. We've not been able to do as much of that because of COVID, but we've had to innovate and find new ways to promote the brands, and we've done well. I mean, if you look at the results in the last quarter, I think ended June, our financial year, we were flat year over year, but the quarter itself had a 17% year over year growth. So we're starting to see the business coming back to pre-COVID levels now.
Right, and on that point, William, a few brokerages or analysts have mentioned, okay, because Wisynco's a bit unique in the sense that you have some higher selling products that would have created kind of the revenue to taper off, but it has rebounded now. Would you agree with that assessment as compared to, say, whether it's a Alaska or Durham or a few other kind of competitive space?
The real
they always kind of mention this Betty Crocker brand. I mean, that's only one of
no. But the real benefit of the portfolio diversity that we have is, we did see certain categories be hugely impacted by COVID. Places like direct consumption on the street type, where we used to sell things like snacks and even bottled water during pre-COVID, during COVID, because you didn't have traffic on the streets, you didn't have people going through the bus stations, etc. Some of those brands saw some declines. On the other side of the coin, you go into supermarket, in those channels, we saw significant increases in brands like Betty Crocker.
Yes.
Ice cream sales last year, I think, were up 30-something% because it's comfort food.
Comfort food has just boomed.
Confectionaries. I mean, we do a lot of business in confectionaries. Take-home snacks, a lot of those brands just had tremendous upside.
Upside overall.
So it gave us a balance. Where we got the biggest hit, and where we've said this repeatedly, is that about 15% of our business comes from the hotel and tourist resorts. People like the tour operators. Large restaurants and so forth who cater to tourists. So we took a huge hit in that area.
So that's kind of where the hit kind of came in.
Correct.
At the time.
Correct.
And William, in hindsight and looking at Wisynco's past and the IPO, are you kind of is Wisynco's mantra more slow and steady, or you just like to boom?
Prior to COVID, we had targets probably somewhere around 25% growth. It's hard to even comprehend a company of our size growing at that pace. And I say this, this is not telling tales out of school. I mean, I was probably one of the most concerned about what the impact would be on the country and our economy from COVID. Right now, I'm the most optimistic I've ever been in business. And not only for Jamaica, but for our company. Because I see tremendous, I would call them windfall opportunities for tourism. I think our tourism is going to explode. I see tremendous opportunities in areas of BPO, and then we have remittances. And if you combine it's like the perfect storm for economic activity.
Yes.
I see that happening and driving not only economic
The consumer
growth,
spending
consumer spending, which we're at the base of that pyramid. Our products basically are the first products consumers will go to.
Perfect.
So we stand to gain the most, I think.
We're going to come back to that. Sounds good. We take another break on Business Dive Extra. More when we return. Welcome back and thanks for joining us on Business Dive Extra. Wisynco is the largest fast-moving consumer goods company in Jamaica today. The Wisynco Group has seen innovation and growth through new industries, new partnerships, or export ventures since inception. The company became publicly traded on the Jamaica Stock Exchange in late December 2017. Wisynco's year-end is June 30th, and the company just posted an improved net profit of Jamaican dollars 3.07 billion, equating to 82 cents per share for 2021 versus net profit of 2.8 billion for 2020. Revenues were fairly flat at Jamaican dollars 31.8 billion year over year, given the ensuing pandemic that has continued longer than anticipated. Over the past 3 years, Wisynco has grown revenues by a total of 30%, or an annual rate of 10%, and net profit by a total of 34%, or an annual rate of 11.3%. Still with us is William Mahfood, chairman of the Wisynco Group. William, you're with us,
Good
man.
to see you. Good to see you.
It's boom on Business Dive Extra.
Boom.
Yeah.
The real boom.
You know, William, the stock price since IPO has done pretty well. Has done really well. You have a strong board of directors, strong audit committee.
Very.
You know, big name Jamaicans.
Yeah.
And we hit it off talking about the market cap. You know, 60 billion Jamaican. And even more impressive, and we've spoken about it, is the $8 billion in cash.
Right.
Can only think of maybe Jamaica producers. Panjam doesn't probably have as much as that anymore.
Right.
Carreras just pays a lot out in dividends. So, you know, Wisynco reminds me a lot of, I guess, the good old days of Lascelles, you know, before Lascelles got bought up or, you know, bought out.
Yeah.
You know, so where is kind of just, in terms of what you can tell us, we know you're publicly traded, but where is Wisynco going with all of this cash?
So, and this comes up almost at every board meeting. I mean, when you have, you know,
it's good you're the chairman, though.
Yeah, no, we have like, you know, John Lee, he's a very, very prudent and you know, looking at the fiscal especially, and he will ask a question about, well, what is the company going to do in terms of deploying its cash? So this past financial year, we paid out the largest dividend that we have ever paid since we've been public, and about 30 cents a share. Which is, you know, I think is almost 2% yield.
2% dividend yield, right.
Approximately. That is, you
the
know,
stock is like 15, 16.
Right.
Around.
And it has not really even dented our cash. You know, the what I would call our war chest, because now we're, you know, significant cash reserves. During COVID, we were a little bit hesitant in terms of, you know, how to deploy them. But as we're coming out of that now, we're very, very excited about opportunities, looking at, you know, a number of opportunities. And with a cash war chest like that, it gives us the ability to, one, go after new expansion, major expansion. So I think within the next year, you know, consumers will see new products, a lot of new business or even categories that we're not in now that we'll be looking to enter. Secondly, looking at acquiring businesses that are already in existence but need to get the kind of marketing, promotion, and distribution support that we offer, similar to what we've done with some of our other partnerships. So the deployment of that cash is going to be eminent.
Yeah. And Jamaicans, I mean, culturally, we love dividends. Even if it's not let's say the best thing, but we just love dividends and we like getting that cash back. At your annual general meetings or your AGM, I mean, you're now the executive chairman. You know, I guess, you know, Andrew is in the hot seat as the CEO, and you have a great relationship, as you mentioned. But do you find at the AGMs that the shareholders are kind of clamoring and saying, William, increase the dividend yield, or are they clamoring and saying, go buy more companies?
Yeah, no, we have not had shareholders who have been unhappy up to this point. Now, at the end of the day, all shareholders, including myself, because I'm a large shareholder in the company, I agree with you, I think. And so there's that balance between finding, the structure on your company to have enough cash in the event of major catastrophe. Nobody could have predicted that we would go through this. I thought, and I think some of us thought, it was going to be worse than it actually turned out to be. From a public health perspective, I think it has been pretty bad. But economically, I think the government has done a good job in ensuring that we don't have the type of fallout that we could have. And I think as we start the recovery process, it's really now just about ensuring that, we take that cash, we find the opportunities and invest in it. Shareholders will continue to get, I think, good returns and through dividends and distributions. And we will just, manage that as much as we can.
It's not a bad time to have cash now, in this type of crisis.
Yeah.
And is there more market in Jamaica to expand? Does it make sense to buy more companies in Jamaica, or is it more of a Caribbean play, or even maybe a G7 country play for Wisynco?
So I think it's an excellent question, and we talk about it constantly. If we're going to look at new businesses in Jamaica, it have to be in categories that we're now not in, because effectively all the categories that we're in we're more or less saturated, and we would be basically cannibalizing our own brands. We do, and through some of our partnerships, we're entering into expanded operations with Worthy Park with new spirits. They've just recently launched the Worthy Park range of select brand rums. We're looking at in trade wins with dairy and dairy products. Tremendous early success with some of their brands and products. So those categories are new categories for us to enter. And ideally, if we do get into other fast-moving consumer goods, any new business that we would look at should have export potential.
Okay.
That's been an area of real focus for us. When we became public, I think our export sales were less than 2%, with a target to hit 10% in 10 years of our revenue. And we're really on a fast track. I think our export sales last year grew about 30%, 34%.
Of your revenue concentration, or like the 31 billion, where do you see exports
right now, it's just under 5%.
Of your whole
of the total
revenue.
company. We'd like to be 10% of revenue before what it will be 2027.
You think you can do it from Jamaica, William, or you got to go buy a company like what you see?
So some of it would be through acquisition, I believe. Like look at opportunities where maybe businesses that have export markets outside of Jamaica, or alternatively, if we bought a business maybe in Central America that had markets outside of Jamaica.
Already had kind of U.S. earnings.
Correct. Because we do feel like any other business in Jamaica, you have to have hard currency earnings. You can't just be consuming U.S. dollars and not being able to be somewhat self-sufficient. So we're trying to move in that direction.
And a question that always comes up, especially in the financial sector.
Yeah.
If a distribution company one day, you have 16,000 points already.
Right.
But if a distribution company came up one day that doesn't have a business continuity plan,
right,
and they had another, let's just say hypothetically 8,000 distribution points, but big top line, big everything.
Right.
Is that a type of deal that would make sense for Wisynco, or it's just too much saturation of distribution already?
So I think, and we have had discussions about the possibility of doing significant consolidation at an industry level, because it makes sense for companies to, when you look at, a lot of the distribution companies in Jamaica basically go to the same customers. We go to many more than most of them, but the services that they offer in terms of transportation, logistics, credit facilities are effectively the same in many, many different companies. So if you consider that maybe there was a way to rationalize some of that, and some of those benefits could be passed on to consumers through cost savings, maybe I think that's going to happen. I think over time you'll see consolidation in the industry, especially maybe on the distribution side. The brands and the marketing can remain, independent, but I believe that the consolidation will come in the distribution.
Right. And one of the things that was really amazing is when you went public in December 2017, and you had very strong consultants and PricewaterhouseCoopers and your auditors. You have a very dynamic structure where you have kind of the holding company, and it has probably cash as well and can do deals. Then you have the public company. Do you see kind of that kind of dynamic holding company also playing a role to assist the public company in going forward?
Yes, definitely. And when you look at, for example, the partnerships in TradeWinds are actually done through the holding company. So that holding company could look to expand its own investments in areas that could benefit the public company.
Yeah.
And as a larger shareholder in the public company, the holding company gets majority of the benefits from those relationships.
And any potential like IPO plans, whether it's for TradeWinds or for, I don't know, JP Snacks or any of these like holdings that you have to get some more shareholder value for the Wisynco shareholders?
I'll have to plead the fifth on that one.
Well, I mean, you're smiling, which is a good thing.
We like the liquidity in the market. I think that even the valuations are still at a very good level.
Absolutely.
And I do believe that the Jamaican stock market is going to continue to see robust growth. So if it continues, I wouldn't say we wouldn't look at it. I think we would.
And what's the board maybe mantra like, or the Wisynco mantra like? Like when you look at, say, Grace Kennedy and a few other companies, few companies get caught in the diversification trap. Few companies, do well from diversification.
Yeah.
Do you see Wisynco really focusing, and as their chairman, on the core and just keep on adding on as you're doing, or maybe go global? Or do you think you'll maybe one day jump into all these different things, financial services, I don't know, this other sector, or to get that cash going?
I do a lot of mentoring for young entrepreneurs and business people, young business people. And one of the things that I tell them is focus on what you know and what you're good at. I don't know financial services. I can read a balance sheet and I understand how to talk to a bank, or I'm on the board of Jamaica National at the group level as an independent director. But from my own view is there's so much in the space that we're in, and the knowledge that we have is, if we're going to go into any new business or any investment, it should be to leverage that understanding of our team, the collective years of experience of our sales team and our financial team and so forth. So if it were my personal opinion, it would be looking at opportunities within that space.
Within the core space.
Yeah.
All right, we're going to come back to that. And we take another break on Business Live Extra. More with Chairman William Mahfood when we return. Welcome back to Business Live Extra. As the competitive distribution sector continues to grow and new entrants continue to jump in, innovation is viewed as the most effective driver of long-term sustainable shareholder value at the Wisynco Group. With the last audited financials, Wisynco had Jamaican $7.66 billion in cash and $402 million in investment securities, totaling over $8 billion. In recent years, Wisynco has been on a buying and deal spree, doing deals with Worthy Park, TradeWinds Citrus, True Juice, JP Snacks, and so forth. Wisynco's dynamic corporate structure makes it an even bigger player and resourceful player than the $8 billion on its publicly traded balance sheet. What's next in the coming years for Wisynco? Will there be an ensuing mergers and acquisitions deals, organic growth, or a mix ahead? For our final time, we're joined by Mr. William Mahfood, Chairman of Wisynco Group.
Yes.
William, it's good to have you.
Yeah, man, always.
Yeah, and William, we were talking about earlier, just, how much more growth is there in Jamaica? You spoke about the years of 11% compound growth rates. What's the type of growth rates that you're seeing now? And I mean, what products are really leading the pack? Is it beverages? Is it something else?
So with our foray into agro-processing, and one of the things that, I look at our evolution in terms of, we started in plastics and then we got into beverages, and now when you look at it as a company or as our holding company is probably one of the largest investors in agro-processing in Jamaica.
Not to sound ignorant, but that's a phrase we get a lot now, right? Agro-processing. But what is agro-processing?
So agro-processing, we have, from at Tradewinds, they are involved in dairy now. So we have almost 500 head of cows. We're putting in a dairy plant to actually produce dairy products from the milk from the cows, and then further added value products. So agro-processing would be taking the basic commodity from the farm and converting it through value added into something that is going to give you better, higher margins. And so
it's not imported.
No, I mean, there is some components. There are some components of imported products in there, but to a large extent, it has a lot of local value-added commodity and inputs. We have the largest pineapple growing at Tradewinds as well. We are recently just acquired the Jamaica beverage plant, which was the old citrus growers plant.
That was SM Jalil, was it?
Correct. Okay. Correct. We acquired that, and we've taken over those brands, which include Juiciful, and I think forget dairy. It used to be Dairy Farmers Milk, but we now have we're putting it under the True Moo. So you'll see branded True Dairy and True Moo milk and so forth. We've recently acquired also some lands where we've expanded into sugarcane. So we're replanting a substantial amount of sugarcane to support Worthy Park's needs for the factory.
And as Chairman William, when you look at those things, do you look at them as, is it to make sure your supply chain is safe, or is it kind of net margin plays?
It's a combination. I mean, yes, you have to. I mean, with Worthy Park, for example, they need cane to produce sugar. For many, many years, the cane supply had been dwindling because sugar prices were not good, and the system that was in place was not the healthiest one. So as we have gotten into it, we've been able to increase the margins in the sugar business. We've improved the efficiencies through increased production, and we've grown their spirits business substantially. I mean, as a matter of fact, we had a board meeting just this week for Worthy Park, and their spirits business is growing during COVID at 30 to 40% on a year-over-year. So we're very, very happy to leverage our capabilities in Wisynco to grow those partnerships.
And how do you find, how do you kind of keep all of the talent at Wisynco? I mean, that's an issue that sometimes public companies have. How do you keep all the talent there and keep recruiting, I guess, stronger and stronger talent to remain competitive?
Yeah, that is a challenge. We have a number of incentive schemes in place. The company pays out annually 15% of its net profit after tax. It pays out in profit share to our entire team. And there are levels of profit share paid to executives and senior management. We also have, which we recently started since going public, we have a long-term incentive plan, which is a stock option plan, which allows senior executives right down to the.
So you do have an ESOP plan, or like
it's a share option. Yeah.
Okay.
So basically, every year there is a number of shares that are authorized. The company has to meet certain targets.
Is it mostly like profitability?
It's return on equity. It's earnings per share, growth, etc. Last year, because of COVID, the company didn't meet those targets. So we did not offer options, and that applies to like the senior leadership team across the group, about 60 people.
Okay, and what's been the biggest challenge you found with COVID, and just the whole COVID-19 pandemic? Although you're bullish on moving forward, you're seeing the revival in a number of critical sectors to Wisynco, but what's the big challenge?
There's been a number of them. I mean, one was creating the workplace sort of, harmony for our people to ensure their health. I think we did very well with that. We've had very, very low incidence of COVID in the workplace. The other one was putting in all the protocols. So we had to increase the transportation facilities because we're around the clock, 24 hours. So we had to put in more transportation to follow certain protocols, hand washing stations, sanitizing, et cetera, like everybody else. And then I think the issues I spoke about, in terms of our strength of marketing at a grassroots level, we have not been able to continue that during COVID. I think we're starting to get back to it now. And then finally, what the impact on our hotel and tourist and restaurant business. It took us a big hit on our top line and I think on the growth that we would have anticipated last financial year. Not this past one, but the previous year. Yeah.
And William, do you foresee a day potentially, I mean, when you look in your quarterly numbers now, you see the management team, you see the board of directors, is there a potential day where you see a non-Mahfood or somebody, let's say, independent as CEO running the business?
Yeah, definitely. I mean, we have already gone through a process of, creating significant strength in our governance through the independent directors on the board. We have 4 independent directors currently who are all excellent in their own right. And then I think as we evolve, I mean, I said it actually too. We had a meeting just this week with some of the younger generation family members, and I said, I remember my uncle and father saying to me that they were almost at the end of their useful sort of career. And even though I still have good years ahead of me, as we now look to transition to younger people, most of those people in the executive roles in the organization, almost all of them actually, are non-family members.
Oh, nice.
So it is critical to ensure that those executives become the future, leaders in the organization. And we've done tremendous amounts of training and development, and we have a number of programs actually at Wisynco for the development of young leaders in the organization.
And we know you love water.
Yeah.
What else is your favorite product? I mean, what are your favorite SKUs, or what are you excited about?
I love Häagen-Dazs ice cream. No, and actually, every time I go out on the golf course, when I make the turn at number 9, I usually would drink half a Boom. I love Boom. I think it's a great product. There's so many brands. When you're in a certain situation and you feel the desire, nothing better than a cold Coca-Cola. True juice is, the orange juice when it's freshly squeezed right off the trees. Again, there's really nothing like it. So there's a time and a place for, I guess, just about everything we sell.
That you have in your portfolio. Yeah. And William, you've gone public 2017, let's say 2018. The company is doing well, very profitable, good numbers. What keeps you excited? What gets you up in the morning now, to get Wisynco where you want to get it in 5 years? What are you passionate about today?
Really, development of our people is the single biggest thing that I've been focusing on for the last few years. Is how can we as an organization keep that passion in the team, from the leadership as it goes all the way down to the people who are in the supermarkets packing the shelves, or the sales reps, or the drivers who are going to the stores. And so that is really what I focus on. What do I need to do? What does the organization need to do through our many, leaders that we have, our HR department, and the people skills that are necessary? Those are the areas that really I think any organization to be successful beyond a generation has to have.
And is there any milestone, whether it's, say, 10 years after IPO, 2027, but is there any big milestone that you'd like to see Wisynco get to, let's say, during your tenure as executive chairperson?
Not really. I mean, there are no targets or financial targets that, we do have targets as a company every year. We will continue to focus on, the growth. My uncle used to say all the time, if you don't grow, you're going to die. And I think,
Yes.
it's hard to build a scalable company of our size and have the expenses in place and for the operational capacity to not have matching growth in revenues. And that's one of the things that, we've been layering on year for 15, 20 years, more and more capacity in our production, in our distribution, and so the expenses keep going up. At the same time, if you don't have the requisite sales with the gross profit margin to keep your profitability going up, you will die, you'll collapse. So we've been focusing on, keeping the good thing about COVID, not that there's many good things, but one of the things that we saw very early on was that there are a lot of areas for us to find reductions in expenses, to consolidate certain areas, and we cut almost, we cut our expenses as a percentage of sales in the financial year 2020 from 25.6% down to like 23.33%. So,
And is that just from having the time to really focus?
correct.
And
the management team,
look at where
we
it's
gave them very early on a set of specific guidelines and said, identify the opportunities to reduce expense, because we knew that we wouldn't have the growth in revenue.
Yes.
So if we did not cut the expenses, we had flat revenue year over year,
Yes.
but we made more money.
Yeah.
So a lot of that was driven by more efficiency, higher gross profit margins because of that efficiency, and reduced expenses.
That's great. William, it's fantastic having our Business Live Extra. You're a legend in distribution, I guess manufacturing as well, and you're one of Jamaica's just most humble and nicest leaders.
Thank you very much, Mark.
No.
Thanks for having me.
It's great having you. That's it for another edition of Business Live Extra. Remember, growth is never by mere chance. It is a result of forces working together. We've been talking with Mr. William Mahfood, chairman of Wisynco Group. Don't forget, you can watch us online at cvm.com/videos/Business Live Extra. Thanks for joining us.